Hello. Thank you, everyone who is joining, is here, will join soon. And thank you to the California State Library for sponsoring all this. I'm here with Levi Sumagase, and you may well know her from her extensive coverage of the insurance industry here at CalMatters. Levy, if you don't know, is a deeply experienced economy and business reporter. She's worked at MarketWatch for many years at the San Jose Mercury News, among other places. She is our overall California economy reporter, covering a broad range of topics, including the workforce, including gig work. You might have seen her gig work story yesterday or today. The intersection of government and business, including budget, tariffs, taxes, and much more beyond that. Although lately she may feel like all she's covering is insurance. It's been a very hot topic, one that Levy's been covering for a long time, but really has heated up. And maybe that's an ill-advised metaphor, but really has become an interesting topic of heightened interest in the last few months. Um, I know, Levy, you were covering many of the challenges because I edited some of them, some of your stories on this, but I know you were covering many of the challenges facing the insurance market, and our insurance commissioner, um, you know, for a long time. Um, we've had then this year, early in the year, the wildfires happened and added even more challenges, I guess you could say, to the California insurance market and the regulation of that market. Now we have insurers starting to react. Maybe you could talk a little bit about how we got here to the point where we're at now, for example, with State Farm and some of the other recent developments.
Sure. Hi, everyone. I'm Levy, and thank you, Ryan. Let's start sort of with a very quick summary of how we got here. I think the first thing I would note, for those who may not know, California has a law that requires the insurance department to approve all property insurance rate increases. So that's a very good background to know. I would say, after big fires in California in the past several years, insurance companies began to pull back in the state, such as by not renewing policies or refusing to write new policies. The insurance companies said they faced increased fire risk as well as inflation. And they also complained about, that they needed to play catch up because during the pandemic, especially during the first part of the pandemic, the insurance department did not approve rate increases for a bit. And so, insurance companies said that they were sort of playing catch up, needed their rates to match their risk. And so fast forward to today, California's insurance commissioner has issued new regulations that give insurance companies a lot of what they're asking for, or a lot of what they've been asking for many years. So that involves, supposedly this will mean the ability for insurance companies to get rate approvals more quickly, the ability for them to use catastrophe modeling when setting their rates. That means, sort of like they'll be able to price what they say their increased risks are into their premiums, and also to factor in their costs for reinsurance into their premiums. So those are sort of the main parts of the new regulations that the insurance commissioner has laid out. As those things take effect, the idea is that the insurance market should stabilize, that insurance companies will want to write policies in California again. And so, that's sort of just a quick summary of how we got here. And then, I don't know, Ryan, take it away.
Yeah, no, and how I guess the logical next question is, how the wildfires have then, um, uh, altered this calculus and these and either exacerbated or shined a new light on new problems around these existing efforts that Laura and others have been grappling with.
Sure. Yeah. So, um, the fires that started in LA at basically God, was it? It was the first week of January. So the new insurance regulations officially took effect January 1st. And I think the fires began January 7th. And so I wrote a story at that time, sort of talking about how the fires could exacerbate the problems, right? It's sort of like the fires sort of proved the insurance company's point that there are these increased risks in California. And so, you know, the fires came as the commissioner was rolling out these new rules and sort of complicated everything. I remember talking to one insurance industry person at the time who said, yeah, this changes everything. But then when I went to the commissioner and asked his office, does this change everything? They said, well, this doesn't change everything. We still want to, we're still rolling out these regulations and we still believe that they are going to improve the market. However, as I've written since, the LA fires did change some things, one of the things, Ryan, you mentioned State Farm. One of the things is that State Farm, which is the biggest insurance company in California, asked for emergency rate increases after the LA fires. State Farm said that it expected to have to pay out billions of dollars in claims because of the fires, and that because of that, they were in dire financial straits. So, a little background about State Farm. Last year, over the summer, State Farm asked the insurance department to approve double-digit rate increases. And the insurance department had not yet approved has not yet approved those rate increases. And so after the LA fires this year, State Farm said, hey, we're still waiting for the rate increases, but now we have all these, billions of dollars in claims on top of it. We want you to approve emergency interim rate increases. And so now what's going on is that Commissioner Ricardo Lara, weighed that request, which sort of goes, the request sort of sought to go around the usual process of approving rate increases because they said, hey, this is an emergency. We need you to approve this now without the rate hearing that it probably would have required. And so Commissioner Lara had to consider that. And what he recently decided is that he conditionally approves the rate increases, the emergency rate increases. However, he is basically expediting the process by saying, yes, you can have these rate increases, but only after you go through a public rate hearing, which is set for April 8th. Now, what I've been told is the difference between that and like a regular rate hearing is that usually a rate hearing takes several months to sort of get going because there's a lot that has to go into it, like discovery and other things, in preparation for a public rate hearing. But what's going on here on April 8th is basically sort of, Commissioner Lara forced a like expediting that process. So
Yeah. Sorry, I was just going to say, this is high stakes in part because it's a lot of money, right? This is another double-digit request from State Farm, isn't it? And
yeah,
I think the average is, yeah,
average 22% increase for homeowners. And a
but it
couple
can
of,
go much, yeah.
yeah, and a couple of different average rates for renters and for other like multi-unit property owners. So yeah, double-digit rate increases. So yeah, pretty big deal. A little bit less than what State Farm had originally asked for. I believe that last summer they asked to increase rates on homeowners by an average of 30%, and the emergency rate they're asking for is an average 22%.
And so for some owners, it could go much higher than that. I know you've heard from some readers already with rather large, saying they're getting rather large hikes. But this judge is going to do what? Is going to ask them to essentially justify and drill in even deeper than the insurance commissioner and the insurance department have already done.
Yeah, what I understand is so a public rate hearing will force State Farm to provide more information and data about its financial picture to justify the rate increases that it's asking for. Commissioner Lara has asked, and his department have asked State Farm for a lot of data. State Farm, but for its part, has said that it has provided that data. But there has been a delay since last summer. And so I think both the Department of Insurance and, an intervener, in the matter, have been dissatisfied with what, State Farm has disclosed so far. And so this public rate hearing that will be happening April 8 in Oakland, will sort of, is expected to provide more insight into, State Farm's financial picture, which is very important because it is such a big provider of insurance in California.
And maybe you can give a little context on why we talk so much and care so, and I think you alluded to this earlier, but why we talk so much and care so much about State Farm. It is, it's easy to assume that's just one insurance company. Obviously, we have a number of insurers in California still, despite having lost some. But what are the implications potentially from where you sit of this decision for the other insurance companies in the state? And yeah,
Yeah, I guess I should just provide a little bit more context about why why that's important and why it's sort of it's a big deal that State Farm asked for these emergency rate increases. So no insurance company has done that before, because they have to work within the system. Because basically, when an insurance company asks for a rate increase that's above 6.9%, basically 7% or above, under California law, an intervener or any member of the public can object and ask, the insurance department to look into that. And if there is an intervener, then there has to be a public rate hearing, right? So for years, what insurance companies have done is ask for rate increases under 7% so that they don't run the risk of having to go through a rate hearing if someone objects, right? So that's why State Farm has been, waiting for to be approved for almost a year now. And that's why they have asked for an emergency rate increase, hoping that they didn't have to go through a public rate hearing process. But, Lara has said they have to. So the precedent that could have been set there, if Commissioner Lara had said, okay, you can have the 22% rate increase for now, the precedent that could have been set there is other insurance companies could have said, hey, us too, we want emergency rate increases too, and we don't want to go through the public rate hearing process either. So yeah, that's the,
could be ripple effects
yes.
potentially from this decision. And the intervener you referred to is typically that's a particular group, right? It's usually consumer watchdog. Is that fair to say? Okay, nonprofit.
Yeah. Consumer
Yeah.
Watchdog is a nonprofit organization that actually wrote Prop 103, which is the California insurance law that governs all this. And so for years, Consumer Watchdog has intervened in these rate increase requests. And according to them, they've, saved California consumers billions of dollars in insurance costs, right? The insurance industry does not like Consumer Watchdog. The commissioner's office has sort of an adversarial relationship with Consumer Watchdog as well. the insurance department has sometimes accused Consumer Watchdog of, you know, intervening and sort of just copying and pasting um, the issues that the Department of Insurance finds. You know, like the Department of Insurance says, you know, we work on behalf of the consumer. But the way California law is written, you know, the public has a right to intervene. And in many cases, that's been Consumer Watchdog. You know, it's a nonprofit. They have lawyers who know insurance regulations and have the ability to work on all this complicated stuff. And so one big criticism of them is that because they do all this and they employ the lawyers and the actuaries, you know, who know their stuff, is that they then are paid under the intervener process. And so, you know, they've been accused of taking advantage of that. But at the same time, they do have the numbers to prove that they have saved California consumers money. You know,
Yeah.
it's complicated. But
Yeah.
I will say
Well,
that one
yeah.
thing that the California law has done is sort of kept California insurance premiums sort of middle of the pack in the country. You would think California, being one of the highest cost states, would also have the highest insurance costs. It doesn't as at the moment, you know, at least according to the last time I looked. But you know, and that comes out of the fact that there is this process in California. You know,
Yeah.
California
It,
insurance commissioner has to approve it, and that sometimes interveners intervene.
yeah, all the issues we've been talking about are very particular to California, including the intervener issue that you just walked us through. It's a very unique
Yeah.
process in most ways. And then if we have a minute later, we'll get to some of the legislation that's percolating at the state level. But first, I wanted to sort of zoom out a little bit to an interesting conversation that you and I had the other day around the Trump administration and how there might actually be some, something to say about the intersection of what's been going on with at the federal level with the state insurance market. Do you have any sort of concerns around interactions about how the Trump administration might intervene in any of this, or any sort of fallout from what's going on, for example, in the national economy, in terms of how it might impact the California insurance situation?
Sure. I mean, I think one indirect effect from the tariffs, for example, the Trump administration's tariffs, is that they could make everything more expensive, right? And so, as I said before earlier in our conversation, one of the
Yeah.
things that insurance companies have complained about is that they are, besides increased wildfire risk, they say that also when there are claims, things are more expensive to replace. So, whether that's a house or a car, everything's just become more expensive, whether it's parts, which will be affected by tariffs, or labor, which have also gone up. Labor costs have also gone up. And so, yeah, that's definitely one thing. Like the
Yeah.
Trump tariffs could affect the cost of replacing things, or, well, the Trump tariffs affect the cost of everything and therefore the cost of replacing those things, you know?
Lumber and homes, as you just mentioned, steel and aluminum and cars
Yep.
potentially.
Um,
But we are being somewhat speculative, but I just thought that was an interesting, wrinkle where there is a little bit of a national, interaction there potentially.
yeah.
Um, Maybe we can talk through some of the legislation. I know it's very wide ranging, right? We have bills around the governing board of the FAIR Plan, the insurer of last resort, as I think you alluded to earlier, in California, which you write about a lot. And that might be a good excuse to go talk a little bit more about the FAIR Plan if you
Sure.
want, and the challenges it's facing right now. And it's what it seems to be its growing importance. And so there's that, and then there's also some interesting sort of tax proposals around being able to write off, I think it's insurance premiums, maybe suing fossil fuel companies, which is a little to the side of the insurance market per se, although it certainly could be related, and how people pay their
Sure.
claims, potentially how the companies pay their claims. But yeah, maybe we could talk about some of the fair plan
Yeah, sure.
legislation.
Yeah, just real quick about the FAIR plan. So it is the insurer of last resort. It's mandated by the state, but it is not run by the state. Other states have FAIR plans as well. You know, it's basically the insurer of last resort in Florida or in many other states. I think it's like something like 30 states have some sort of FAIR plan, whether it's called a FAIR plan or not.
Yeah.
So in California, because of the state of the insurance market, the FAIR plan has grown by leaps and bounds over the past few years. So when a homeowner is kicked off their plan or canceled or non-renewed, they have to find fire insurance elsewhere. And so they have to turn to the FAIR plan. The FAIR plan is a pool of insurance companies that are required to be in this pool if they do business in California. So, you know, State Farm or whatever, some other companies make up the FAIR plan. And the FAIR plan is run by, by executives and a governing board that are accountable to the insurance companies. And so the state has pretty limited oversight over the FAIR plan. So one of the proposed bills that I recently wrote about would put the state's top two lawmakers on the governing committee of the FAIR plan. And the reason for that, according to the text of that legislation, is that the FAIR plan has had issues, possible solvency issues, right? And so lawmakers say they want and need increased transparency from the FAIR plan so they can keep an eye on whether it has enough money to pay out claims when there are catastrophes in California. Also in my story that I wrote recently, I pointed out that the FAIR plan, because it's been growing so much, has had many complaints about the way it's run or the way payments are applied. I've talked with insurance customers who are on the FAIR plan. I've talked with insurance agents and brokers. I've talked with people who work in the insurance industry who have to deal with a FAIR plan, and they are very frustrated by it. They say that the FAIR plan's customer service, leaves a lot to be desired. They say that it's hard to get a hold of people in the FAIR plan, and that it just takes a long time to get issues resolved. And so, if there were to be state lawmakers on the FAIR plan governing committee, presumably they could also keep an eye on not only the FAIR plan solvency, but also in the way it's run. So that's one bill that I'm keeping an eye on. And sort of related to that, there's another bill that's been proposed that would allow the FAIR plan to issue bonds through the state mechanism, through California's iBank, basically. And so that would allow the idea there is to give the FAIR plan more ways, more tools, more financial tools, to make sure that it's solvent. Like it would allow the FAIR plan to issue bonds, borrow, like basically spread out its financial risk over time. So that's another bill. Yeah, the bill that you mentioned also, that I also mentioned in my story, that's interesting to me is one that was put forth by a couple of Republicans in the California legislature. As you know, the Republicans are in the minority in the California legislature, but they have introduced a bill that would allow home insurance customers for the next 5 years to write off their insurance premium increases. that was that was interesting to me. I talked to one of the authors of that bill, and he told me, he just they felt that Californians need help. And so they put forth this bill. It's very interesting. I mean, it would mean that that would spread out the pain to basically all California taxpayers. So I'd be curious to see if that bill passes. And then yes, there is a bill, that's been proposed that would basically encourage um, insurance companies to sue fossil fuel companies when there is a catastrophe that can be tied to climate change and the fossil fuel industry's role in it. I think that's a pretty long shot bill, but it's very interesting. Um, it is, I mean, this whole issue, the whole reason we're talking today is because, um, of the effects of climate change and the increasing risk of wildfires and other catastrophes in California.
Now, fair plan, and by the way, for those who are watching, the Levy's piece on the insurance legislation goes super deep on some of these fair plan customer service horror stories. If you get a chance to visit her author page, do check out that story just because it's not just on the legislation, but it really goes in deep on some of the problems with fair plan. And correct me if I'm wrong, I was going to ask, we've talked about the State Farm premium hike that's on the table and looks like it'll maybe kind of probably happen, and potentially other insurers following suit. Fair Plan has its own hike coming in a way. They call it an assessment. Do you want to, and apologies if you alluded to this earlier, do you want to talk a little bit about what that is, and we
Yeah,
know
yeah,
when it's coming exactly?
yeah. So also after the LA fires, the Fair Plan stepped forward and asked the insurance department for an assessment, which is also a very rare thing. I think it was in the late 1990s that last happened. But basically the Fair Plan said, hey, the fact that we have to pay out all these claims for the LA fires means that our financial that we're in dire financial straits, and so we need $1 billion to be assessed. What that basically means is the Fair Plan needs $1 billion from its member insurance companies. And so also, according to Commissioner Lara's new regulations, now insurance companies can try to recoup some of that $1 billion that it has had to give to the Fair Plan. The insurance companies can try to recoup half of that $1 billion from their insurance customers. So if you are not on the fair, even if you are not on the Fair Plan, but you are insured by an insurance company that is in the Fair Plan, you will probably soon see, you know, a, a one-time fee, um, that has to do with that $1 billion assessment on the Fair Plan. So I don't know when it's coming. We don't know how different insurers will try to recoup the costs, but it's pretty certain. I'm almost fairly certain that they will because they can. I think that just underscores the fact that these insurance issues, this crisis affects all Californians because most of us have to have insurance on our homes, or landlords have to have insurance on their properties no matter what. And so the insurance issues affect all of us.
Thank you. Yeah, and I was a little loosey-goosey with my language. Not a premium increase, just so it was a bad analogy, but definitely a fee, a
Yeah,
one-time fee. I wanted to say before we break, if anyone watching this, if you have any questions for Levy or tips, she's asked me to do this, but I'm sharing her email address. It's Levy, spelled like Levi, like Levi, at calmatters.org. She has asked you to reach out. Feel free to reach out. Do I have that right, Levy? I'm not.
absolutely.
I'm not
Absolutely.
forcing her to take these emails. He wants to hear from you.
Yes.
But yes, and thank you for explaining the Fair Plan assessment so well. I realized I had only given you about 3 minutes to explain an incredibly complicated a thing, and I feel like throughout this chat you've done a great job of compressing these hugely complicated sub issues within the broader issue of California's insurance market into something that hopefully people watching can understand and digest if they didn't know it already. Yeah, I know we have some informed viewers as well. So thank you so much to everyone who joined. Thank you again to California State Library. And thank you, Levy, for your time and insights.
Thanks, everyone. Thanks, Ryan.
Thank you. Bye-bye.